I know that you still have a couple names that you got your eye on here, Ken. So talk to me about these, because of course a couple of these, hey, these are retail favorites. These are institutional favorites. These are two of the biggest companies in the world in Microsoft and Apple. Kind of old, reliable, going back to the companies that have put this market on their back for the last 20 years. What do you like about them now? Is it just simply that you see a discount because of the overall market?
Some of it. Look, there were leaders before we had this big downturn, right? And Apple and Microsoft, I almost said applesauce. Apple and Microsoft together, I mean, you look at these companies, they beat their estimates for the quarter, always. They raised guidance. They buy back stock. In fact, actually, the last earnings cycle, Apple said, oh, you know, we were buying back 70 billion. Let's make that 90 billion. I mean, they just added $20 billion of buyback. Warren Buffett is there, screwed up some shares. Microsoft is on the hot areas, right? Cloud, computing, also their Xbox. Apple, by the way, if they have some type of component that says you wear something on your ear that goes to your nose, there's $10 billion that comes out of the sky for them. So these are the companies these are the companies investors should look for, because they can continue, because of great cash flow, raise dividends, buy back stock, and you have to have good cash flow to do that. I also had on the list on NVIDIA, AMD. Again, we still have a semiconductor shortage. These companies also are able to beat estimates when their earnings come out, forecast higher expectations, buy back stock, and that's the playbook we like. Listen, one thing we tell your viewers not to do is stay away from those stocks like DocuSign, the stock du jour that gets taken out back and shot today, that goes down 30%, or today I think down 25%, that look attractive. Stay away from those. I mean, those companies that are missing numbers and guiding lower, that's gonna be like quicksand for investors. We stay far away from that.